So today we're going to talk about two stocks out there that I think are struggling and I believe will continue to perform badly going forward. So I'm going to explain the reasons behind that, and as well as that I'll talk about a couple of other things. I hope you enjoyed the video, hit the like button and let's get started on today's video. So normally at this point I'd say hit the like button, subscribe. We're close to 16,000 subscribers. I don't have to say anymore, guys. We got there last night. 16,000 subscribers. That's absolutely crazy. Like, imagine 16,000 people in a room. That's absolutely insane. That's some decent championship football ground stadiums going on there. So thank you so much for any of you guys that are subscribed. If you're a new subscriber, hopefully I can provide some good information for you guys and make it worth your time. You know, you're giving up your time to come watch me. Hopefully I can give you something for that. And for you guys that have been here for 2, 3, 4, 5 years, thanks for sticking around, and hopefully we can continue to keep smashing the market. I will do the live Q&A session on Sunday for you guys on the YouTube channel as a thank you, so keep your eyes open for that. And as well as that, if you want some free shares, join Trading 212. That's personally the investing platform that I use. A lot of you guys have recently been doing that for some reason. I don't know why, but there's been a lot of people signing up. So if you do that, you get a free share. So go do that if you want to use Trading 212. I think it's an absolutely amazing platform, and I use it myself. So first of all, the first stock that I believe is struggling out there and struggling big time, Nike. I have no idea how Nike is only down 6% today. I thought this stock would be down double digits. Obviously, it had a bit of a jump up in the share price because of the new CEO news. I expected it to give it all back, and I thought it would head back into the $70 range. It's not doing it at the moment. Hey, you know, it might go on that in the next couple of days. It might go on a bit of a downtrend, but I am surprised to see Nike holding up this well. Nike reported the numbers last night, literally after I edited the video and got it online. They reported the numbers, so it's only just short of being on yesterday's video, and it was poor. They actually withdrew their outlook. Obviously, they have the CEO waiting to come in, which is a good thing because I do believe there has been big management mistakes in the last couple of years, so probably a good thing that the CEO is coming in, but that's what I think everyone's kind of really waiting for at the moment. But going on to the numbers, yeah, they were poor. We knew they were going to be poor because obviously that was the big thing that got the CEO the boot out the door. There was the numbers that were going to suggest it to be poor, and that's what happened. Now it says here gap EPS B. I don't really like looking at numbers like that. I actually like looking year on year. Analysts can fudge the numbers to bring them down, hike them up to go, oh look, they beat. Yeah, they only beat because you downgrade the numbers, you know, like 3 days ago by 20%, and then you go, oh look, they're amazing. I like looking at year over year comparisons, and we do have one here, but we're going to look in a little bit more detail and dig into the numbers themselves. And when we start off, this is the big red flag. Nike direct revenues down 13%. Direct revenues, this is a concern. That the direct revenues were down more than your revenue. Your revenue has already been slapped down 10%. That's a big downward move. The fact that your direct revenues is down even more, that is scary. That's saying you're struggling on the branding power side of it, that's down a little bit more. And you know, only 2 years ago, Nike came out and said, yeah, direct is our growth driver. That's where we're going to go. We're going to kind of boot off Foot Locker. We don't need you anymore. We're going to do it all ourselves. And all of a sudden they've gone, actually, you know what? We don't want to be doing it ourselves because our wholesale revenue is a lot stronger than our direct revenue. That was a big concern in these earnings. But as you get down the numbers, it just got worse and worse. Obviously, the revenue was down 10%. The big thing was the profitability. It got scary. Income before income tax is down 21%. Net income down 28%. EPS basic down 26%. That is awful. That is awful, guys. I even sat back and read those numbers and I went, wow, that's the stock is going into the 70s, and it hasn't, which is such a surprise because the problem is with Nike is that it's not really cheap. It's 27 forward times earnings, and the problem is you look at a lot of other companies at the moment like On Holdings, and there's competition clearly coming for them, guys, because you look at Deckers, On Holdings, there's a couple other ones out there. You look at the research that's out there at the moment, some of these are actually still performing really well. You know, On Holdings on the recent quarter came off 27% year over year growth. So clearly, yeah, there's some stocks that are struggling a little bit, but none of them are struggling on the level that Nike are struggling. Like, competition is a real big thing for Nike, and clearly they're losing market share big time. And the thing is that everyone says, oh, it's Nike, it'll be all right in 5 years' time. yeah, it might be all right in 5 years' time, but realistically, if you want to make good money on the stock, can you pay 27 times earnings, forward earnings for this business? Because right now, you have a big issue. It's not just a small issue, you've got major decline of growth. This company doesn't only have to get back to flat, stop declining revenue growth, it has to get to positive revenue growth. And when you're paying up for a company at 27 forward times earnings, it can't even be like 2% growth, 3% growth. We're talking the fact that Nike has to get back to like 8, 9, 10% growth to justify this valuation. And that's why I'm not interested in Nike, because there's clearly a lot of things going wrong, and the numbers they have to do to justify this valuation. I posted on about it on X last night, and somebody said, yeah, but it's all priced in. I was like, is it? At 27 forward times earnings, it's all priced in? I don't think so, because analysts are forecasting next year a rebound of 4.9% growth, which is ambitious. We'll see if they can get there. But even so, I think that sort of 27 times earnings is a premium valuation. It was actually 29 before the drop today, and it might even get a lot worse now. The guidance is being thrown out the door. I think you need to be growing more than 4% a year, guys. I think if you're paying for this, you got to expect Nike to get there to 8, 9% growth, and I think you're assuming a lot for Nike to get there. So we'll see if they do it, but that's why I've never been interested in Nike. I've not bought Nike because I think the numbers they have to do for this valuation is a big turnaround, especially when you got someone like On Holdings and a few other stocks that look like they're clearly eating Nike up a little bit at the moment. Which then surprised me on another shocking move today, JD Sports. JD Sports was down 6%, so it was nearly the equivalent of Nike stock and what Nike stock was down today. Obviously we talked about Nike stock being down 6%, so they're about level, but Nike stock, JD Sports compared to Nike, these were fantastic earnings. JD Sports, you look at the number. I saw Nike's numbers last night and I went, good luck for JD Sports tomorrow morning or this morning. And then JD Sports brought their numbers out and they were absolutely fantastic. Revenue of 6.8% growth. Whew. What a big difference from Nike that was. Gross margins was down slightly by 20 basis points. There was also the acquisition and a bit of a marketing spending there, which was okay. Pretty much holding on to the gross margins. Operating profit before adjusted items was 8.3%, and then profit before tax and adjusted items, because what we had is we had the Hibbett acquisition, some FX fees and stuff like that. So from that point of view, once you look at the cost, it was fine. This is good growth on the numbers, and Nike would dream of doing these numbers. And the big thing here is you've got JD Sports, which is 10 times forward earnings. It's 1/3 nearly of Nike's valuation, and yet numbers that JD Sports doing, Nike could only dream of. And if you'd be worried that Nike's so weak at the moment, you'd really expect JD Sports to be suffering, and yet they're doing nothing but thriving in this environment. And maybe there's just a bit of profit taking on JD Sports because it's had a bit of a run up so far this year, but I cannot believe that it is. I guess there's a bit of a drop off, as you can see here in the stock price, so I guess it's a bit of a bad time to use a year to date, because if you went within a week later, you would say the stock is actually up so far this year. So yeah, I still think JD Sports should be higher than where it is right now for the numbers they're currently doing. So that was the shocker for me today. The next one, or the last one on this list that is struggling, is Tesla. Tesla continues to struggle. Year to date, it is flat. So, if you held Tesla through this year, you've been a bit disappointed compared to like the S&P's performance. But Tesla, in my opinion, it's had a tough time. I've been a little bit more negative on Tesla for the last couple of years. I think that if you're getting towards like the $100, $120, $150 range, that's not too bad. That's actually not too bad price to pay for Tesla. But I think the valuation just got really, really rich in the last few years. In the last kind of 3-4 years, it's kind of been a bit of a dead time in Tesla. Most people that have had Tesla in like the last kind of 3 years haven't really seen much performance from it, and they kind of probably been looking at the S&P 500 and going, I've owned Tesla, and compared to the S&P 500, I should have just bought the S&P 500. And I think there's a big difference with Tesla. I think people don't realize, and I've had a lot of stick for this. I just call it how it is, guys. If I like something, I'm honest with you. If I don't like something, I'm honest with you. And I just call it how it is. And I've been saying for a while, I don't like Tesla. And I've had a lot of I think the company's good. I just think the valuation's absolutely bonkers. And I've had a lot of stick for it. But hey, it's still proven right on where we're at with Tesla. I said it won't perform that well, and that's where it's been at. And I think the big misconception people make is they think Tesla is this stock still. They think that they're in this stock still. And it's not. Tesla from this time period to where it is now is a total different beast. The period that was a place where for so long Wall Street and investors when Tesla's going bankrupt to actually it's becoming a company that can make millions of cars. And that's the realization that Wall Street went on. And obviously I owned it during that period of time. Overall, I've made money on Tesla. I always thank Tesla because, it's been one of my best performers. Collectively, I've made something around an 800% return on Tesla, which is amazing. There's not many people in the stock market that can say they've collectively made an 800% return on a stock. And that's happened for me because I had it quite early on. But I think a lot of people here think they're going to get this again, and they're not. It's a total different business now because this company is now valued at 779 billion market cap. That's no small business. And you look at the numbers at the moment and the numbers just aren't there. They just recently did their delivery numbers today and the numbers were okay. Like they were okay numbers, but when you're a 779 billion market cap company, when you're currently trading at 69 times earnings, when you're currently trading on a forward PE ratio of 80 forward times earnings, I'm sorry, you've got to do better numbers than this, and I think the stock will stay stagnant until either the valuation comes down, that means the stock price going down, or for the numbers have to go back to insane growth. And if you look at where the numbers are at the moment, they're nothing but that. For the last 2 years, they've been nothing but that. And that's why I can't believe that Tesla holds on to an 80 forward times PE. Because when this year, last year was a poor year, this year, people keep saying, oh, it's a blip. But when it's 2 years, guys, how long can you keep saying it's a blip? If you look at this year's numbers, guys, the revenue was 2% year over year. 2% for an 84 times earnings business. It's insane. You look at the EPS is going from $3.12 down to $2.29. And there's been like a 30% decline in the EPS numbers. But yet you're paying 84 times earnings for this. And even what's more scary than this is that you look at how poorly they've executed this year. This is what I go on about analysts changing the numbers to make it not look as bad. But when you look at it on a long-term point of view, you'll actually see in context how bad the numbers are. Just to show you, these are the current numbers that analysts are expecting for this year. I want to show you what they were expecting in January. In January, they were expecting EPS this year of $3.66. And like I just showed you, that's gone down to $2.29. It's insane. It's crazy. You're talking, a 40% decline in the EPS estimations from this year at the start of the year. Revenue growth, obviously we're at 2% at the moment, but at the start of the year, analysts were actually expecting 19% revenue growth. That's 1/10 of what they were forecasting at the start of the year. And you look at the stock and you go, yeah, it's actually underperformed the stock market this year. It's down 0%. But when you actually look at the context of how bad these numbers have been, and it's 84 times earnings, and it's only flat for the year, I think even Tesla are lucky. I think any other stock more than likely would be down 30-40% on these numbers if they're downgraded this much. And that's the big issue. And you look at someone like a BYD, and they brought their recent numbers out for August. Once again, they're a company that their recent sales, they actually went up 30% compared to August 2023. So there's other businesses out here that are still doing really good. And that comes down to the issue. Tesla, when we talk about Tesla during this period of time, they were ahead of the game. EV technology-wise, they were so far ahead of anyone. But they've just stayed stagnant for so long. I think they've been making some bad decisions. I still don't know why the Cybertruck was made. And why there was still no cheaper model made as well. And what's happened to the semi-truck? There were so many bad issues and decisions made during that time frame that all of a sudden, you stay stagnant for 3 years and then all of a sudden, boom, the pack starts catching up to you. And, the unique selling point on Tesla now is that, people say, well, it's not just a car company now. They've got obviously the solar panels, all the technology, the self-driving. The issue is that it's great and yeah, that's worth something. But while 90% of your revenue still comes from the car business and, you're not generating decent amounts of revenue, and you can say, well, in a few years, this is going to be worth X amount, or it's still not contributing any revenue. There's only a certain amount that you're willing to kind of put a value on that on. At some point you have to see the financials delivered, and right now when you look at the financials, they're so very, very poor. I'd even argue the case that next year, if it went to $3.01 and it grew at 15% year over year, which I actually don't think Tesla can do next year, which is very similar to what I said at the start of this year. I said there's no way Tesla are doing these numbers here, and obviously that was proven right. I'm looking at Tesla next year, and I'm thinking, I don't think they can get to 15% growth next year and the EPS up that much, because if the EPS is going to go up that much, they need the prices to go up huge, and I can't see it at the moment, because why would you when you've got a lot of cheaper competition out there? I think those numbers aren't achievable. But even if they did, let's say with this case scenario here, I'm sorry, but with Tesla at 80 guys, 80 forward times earnings, you've got to have more than this. It's not acceptable. And I just look at the stock and I think, I look at Nike, for example, and I can't buy Nike because the numbers they have to do to justify that valuation, I just think there's a lot better opportunities out there. And the same with Tesla. I think Tesla's a good company and I would own Tesla at the right price. But I tell you something, I'm not paying 80 forward times earnings for these numbers, because these are crazy. And I think a few people think they're sitting on Tesla like it's going to go on one of the runs that it used to do through 2019 and 2020. But I'm sorry guys, I just can't see it at these numbers at all. And I just don't see them doing the numbers at all that they're supposed to do. And I think even if they do some decent numbers again, I just don't think it justifies the valuation. And that's the big issue that you have with Tesla. And obviously, I think maybe a few people are having a bit of a reality. Stock's down 3% today, and maybe they're having a bit of a reality check, like, it's been on a little bit of a run recently, and then all of a sudden they've gone, actually, we're buying into this stock, but yet there's still a lot of improvements needed at the moment, and I would be staying way clear at the moment. Anyway, so that's the video for today, guys. A little bit of a talk on Nike, stock that I am avoiding still. JD Sports, which is not a company I'm avoiding. I thought their earnings were very good, and I'm surprised to see the company down today. And another stock that I am currently avoiding, Tesla, which I would buy at the right price, but yeah, it's definitely way off that at the moment. And at the moment, I just see more pain going forward at the moment for Tesla. But as always, things can change, and maybe they do turn it around. We'll see what happens. And if any of you guys are Tesla shareholders, I hope it does work out for you guys, and same for you if you're Nike shareholders. But that's my opinion, and like I said, I'm here to be brutally honest with you guys, and that's where I see the current positions of those stocks. Hope you enjoyed the video, guys. Hit the like button. If you're new around here, subscribe. I'll see you in a bit.